What's going on, everyone? Welcome back to my YouTube channel. In this video, we are going to be talking about the order block strategy for all synthetic indices. The order block strategy for all synthetic indices. If you're someone who's been looking forward to learning how to trade synthetic indices using the order block strategy, this video is actually for you. Or you are someone who has been struggling with the order block strategy and you want to improve on it, this video is also for you. Okay, so this video is going to be answering the following questions. Number 1, what is an order block? Number 2, identification of an order block. Number 3, high probability order block. Number 4, how to trade the order block. And then number 5, risk management. Order block risk and money management, right? So if this is what you want to get, please subscribe to this channel and smash the like button and turn on your post notification bell also. Okay, now I have a gift for you. To get this gift, check the description box. There's a link to my Telegram channel. Join my Telegram channel and get this gift for you. I have a gift of free package. Okay, it's a package where I want to give you free signals, free tutorials on my Telegram channel, free chat setups with order blocks. Okay, I want to give you all this on my Telegram channel. So to get this, just check the description box and click the Telegram link in it and join my Telegram group. Okay, so as you can see, I've got this trade running here already. Actually had this trade. I slept, I put this setup and then went to bed and slept. As you can see, this is 2:35 a.m. Is it 2:35 a.m.? So this very trade, I took the trade using a pending order, right? That's using a sell limit. I took the trade here, placed my stop loss and went to bed. I just woke up to find out that this has gone deep in profit. Okay, this is over 89 pips. This is over 89 pips that we've taken already. You can see, and we are still holding to take more pips, to catch more pips on this trade using a simple order block strategy that I'm going to teach you right now. Okay, so let's go straight into the video. Number 1, what is an order block? An order block is the last opposite candle before the break of structure. Okay, the last opposite candle before the break of a structure. Now, how the order block works is that the big boys, the big players in the markets, the banks, they put, they make their orders in bid in the market. So this last opposing candle actually gives you an insight. It shows you an area where the big boys, the big players, placed their order in the market. Okay, they placed these orders using pending orders, pending market orders, right? Like the buy limit and sell limit. So when price gets to that area, the order is executed and price runs in that direction. So if you are able to identify this area, if you're able to spot it out, you'll be able to trade in line with the big boys. All right, so I'm going to show you exactly how this works. I'm going to show you exactly how it works. Follow me. So let's go to number 2, identification of order blocks. Okay, how to identify order blocks. Now, like I said earlier, the order block is the opposing candle, the last opposite candle before the break of a structure. Now, assuming you have something like this, just imagine you have something like this. Okay, this is a candle, a red candle. Okay, let's see. We have something like this. This is a red candle here. This is another one. This is another one. Then we have price change direction in this way. Price broke this one in this direction, broke it again. Okay, continue in this same direction, continued until there was a break of structure. Okay, so here you can see we have a break of structure. Now if you are asked to spot out the other block here, what will be the other block here? And remember, we said that the other block is the last opposite candle before its structure gets broken. Okay, now this is the place the structure got broken, right? This is a break of structure. If you have not, or if you don't know what a break of structure is, go and watch my video where I talked about market structure. All right, so this is the break of structure, and the last opposite candle was this. So before the structure got broken, the last opposite candle is this, and that is our other block. So what we do is we mark it out using our rectangular box like this. You mark it out and you wait for price to return back into it. Wait for price to return back into it like this. And when price returns back into it, then you want to see a buy, like you want to take a long position. Okay, you want to buy. This is what an order block basically is. All right, so that is what I saw here. Let me now show you. Look at it here. Okay, let me start from here and show you. You can see we have this break of structure here. Then this was the last here. This was the last opposite candle. As you can see, this candle here, this green candle, was the last opposite candle before the structure was broken. You can see that is our other block, but price did not return to it, so it didn't hold. Price did not return to it and it did it. Now this is where another structure got broken. You can see it here, and this was the last opposite candle before the break of structure. And you can see as soon as price entered into it, as soon as price got into it, there was this rejection to the downside, and price has been selling. That's it. Now this is another one here. This is a break of structure right here. We had a break of structure right here. Okay, and then this candle was the last opposite candle before the break of structure. Now price didn't actually get to it, probably because we have this. If we scale down to the lower time frame, you might find out that this is the other block. If you scale down to the lower time frame, okay, so as soon as price got there, as you can see here, as soon as price got there, it began to sell. Began to sell deeply. Okay, that is how you spot out your other block. Now look at this. The trade I am in currently, look at it. Let me show you how I spotted it out. This was the break of structure here. This was the point where our structure got broken here. Yeah, okay, so the point where our structure got broken. Then I saw this green candle. This is it, this green candle here. That was the last opposite candle before the structure was broken. So I quickly marked it out like this. Now it was late at night, so I couldn't wait. This was around okay, this was around 7. Okay, this was around 8 p.m. So I couldn't wait for it. I think I couldn't wait for it, so I had to, use my pending order to take the trade. I had to use my pending order to take the trade. So I waited for it. Okay, the candle actually occurred around 7 p.m. Nigerian time, 7 p.m. Nigerian time. But I think I saw this move. I made around 8, right? I made it around 8 or so. Then I knew I might not be able to wait, so I used my pending order, place the trade right here, place my stop loss above, and then went to sleep. Then woke up now and I found this happening. Okay, so basically this was the break of structure here, and then this was the candlestick, the last candlestick before the break of structure. So that was the last opposite candlestick before the break of structure. So I actually used it as my order block, and you can see what's happening. Price has been dropping massively. On the 30 minutes time frame. This is actually 30 minutes time frame, and 30 minutes time frame is seasonable. This is how we catch spikes, guys. It's not even this 1 minute something that you go to 1 minute time frame and you want to be catching a lot of spikes. No, but this is, if I should switch to the lower time frame, you see that I've got tens of spikes. Okay, if I should switch to the lower time frame, look at it. We've got tens of spikes and we are still catching more. So this is how you trade the order block, right? This is how you identify the order block. Now the next thing we are going to cover is high probability order block. How do you spot out high probability order blocks? Because it is not all order blocks that work, right? Now, for instance, look at this. This was the break of structure. This was another block, but you see, price broke through it with ease and not even drop. So, how do you know the order block that will work? This was another one here, another order block. Another break of structure. This was the last opposite candle, and you can see price just broke through it, and then that's it. So you would have lost this one if you used this other block. You would have lost the trade. So how do you identify and trade high probability order block? There are four key factors I'm going to give you that will help you to identify a high probability order block. Okay, so number one is unmitigated. The order block must be unmitigated. What does that mean? To say that an order block is unmitigated simply means that the order block has not been tested previously. Alright, now this whole order block stuff works on all synthetic indices. Okay, so for that reason, let me go to another pair and show you. This is boom 1000. So it works on all synthetic indices. You can use it to catch a lot of spikes. You can use it to trade, buy or sell, trade in the both direction. So that order block must be unmitigated. What that means is that it must not have been tested previously. Okay, once you see an order block, make sure that it has not been tested previously. Now look at this one here, the other block we have here. You see, this was the break of structure. First structure was broken here, second structure was broken, another one got broken here. Now this was the last opposite candle before it happened. The last opposite candle before that structure got broken was this. And when price broke out of it, it's never come back to test it again. Okay, so this means that the order block is valid, and so we marked it out up to this point, right? Marked it out, and price went up and came back straight to it. And as soon as price came back straight to it, you can see this was it. Price, let me show you, price moved up massively. Look at this. If you had bought this with just 1.0 lot size, look at this, guys, you would have made over $300 from this. You have made over $300 from this simple strategy. You can see it. This is it. You have made over $300 from these simple strategies. From this simple strategy, you have made over, wow, look at it. You have made more than that. What is 300? You have made more than that from this simple strategy. Look at it. Okay, let me get it properly. Imagine entering the trade here. You have made, this is it, over $500 from this simple strategy. So that is the power of order block, guys. That is the power of order block trading. So it really works. Look at another one here. Look at another one. The order block must be unmitigated. Price broke this structure here, and you can see this is the last opposite candle, which has never been tested before. Okay, so as soon as price came back to it, you quickly enter the trade. Look at, as soon as price came back here, you enter the trade here, and you started buying, started spiking. This is the best strategy to catch spike. This is the only approved strategy to catch spikes. You know, I trade the break and retest strategy, and in my previous video, I told you guys that we have components of a market structure. Once a market structure is broken, once a structure is broken like this one, there are components in that structure you should look out for, and order block is one of them. So these are the components that you will use. These are the things you will use to find out the entry point, the area where you should enter your trade within that structure. Okay, so this is a breakout and a retest. So you are looking for where price will retest that structure, and the order block is one of them. Okay, so we use it to enter the trade here, and this is exactly what I train people on in my mentorship class. Okay, so if you have not joined my mentorship class, this is still your opportunity. Join my mentorship class. I will train you live. You will join me in live trades on how to use this order block strategy. Okay, you can see my Telegram link in the description box. Contact me via the Telegram, and then I'm going to walk you through this whole strategy live. Okay, you will join me. We'll trade together live on this, both scalping, both the trading and whatever. This is how you make money from the business. Now look at it. Look at the order block. As soon as price came back to it, here you enter, and then this is it. It gave us over 350 pips, right? Over 350 pips. That's over $350 for someone using 1.0. Just this, and the risk is very small. Look at it. You enter the trade here. Place your stop loss below. Your stop loss below it, and this is just about $29, right? Let's just say $30 risk, and you are having about over $350 in your target, right? That is how this strategy works. Now look at another one, guys. Look at another one. I want you to stop chasing spikes, guys. Stop chasing spikes and use this strategy to catch them. Look at it. In one of my videos, I told you guys that we wait for spikes to chase us. We don't chase spikes. It is spikes that chase us. Now look at it here. We had a break of structure here, and then this was the last opposite candle, which has never been tested before. and then you mark it out and wait for it. Just use your pending order, wait for it, just set it up and go to sleep the way I did. And look at what happened. Price came back, and then you can see what happened here. It began to spike. This is it. Let's see. We are risking just you're placing a stop loss there. This is just $17, and then this is it, getting over $160 in just this thing. And it didn't take a lot of time. It took just this is a 30-minute candle. So when the trade started, it took just 6 hours 30 minutes for this to complete. 6 hours 30 minutes, and this, you are done. You are just done with the trade and you're out. So guys, this is the best way. Now the second way, remember, the number one way is that order block must be unmitigated. The number two factor to identify a high probability order block is that it must be around a key level, right? It must be around a key level. Now look at this. Look at where the order block is under retest here. We had another low here, we had another low here, we had another low here. So this is within a range. This is a key level, right? So this area is qualified to serve as our support level, right? This area is qualified to serve as our support level. That's where we have this order block. It's qualified to serve as a support level. Okay, so you see, try to use an order block that is within a key level, probably a support or a resistance level, right? And you will find out that it will work more perfectly well. Okay, you can see that it is still within that same level that we have this our order block here. It is still within the same level that we have this order block. Let me just show you. This is it here. You can see this is where the order block is, but we already had the rejection around it before. Okay, and if you trace it backward, you might see that we had, look at, price rejected the same place before earlier. Look at it, the same place was rejected earlier. Look at it, just look at it. So this must be a key level for you. Okay, look at another one here. We had another block here also, so you can also use this to sell boom and crash. It's not like it's just for catching spikes. Now look at it, price broke this structure here, and then this was the last opposite candle. You see, we had previous retest here, and so you wait for it. As soon as price got there, you sell, and this is it. Very easy. Now let me show you also. The next one is that it must be an impulsive move. Let me just go to another this thing. Let me go to another instrument. Let it not be as if it's only the other block works. Look at it. We also have another one here. This one is from 300. It keeps working. Look at it. We have break of structure here. This is the other block, and it worked very easily. This is from 300. Look at it here. Break of structure right here. This is the last opposite candle, and it works very easily, guys. You use this to milk the market. Just use it to trade. It is stress-free. Look at it here. Break of structure. This is the last opposite candle. Price came back to it, and this is it. It's going up. It's going up already. So this is how it works. Here, the same thing happened. We have this thing here, break of structure here. This was the last opposite candle. Price came to it, and then boom, you are selling. This was the break of structure here also. Then this was the last candle here, the opposite candle. Price came back to it here, and then down. You are making profits. Okay, so this is how it really works. Let me still show you. It still works on the volatility indices. So like I said earlier, this is a strategy that works on all the time frames. Now look at this. This is volatility indices. Now you can see what happened. Price, we had a break of structure here. Price came back here. This was the last opposite candle before the break of structure. Price came back and then zoomed off. If you had entered this trade, look at it. You still be buying. You still buying up till now. And this is a lot of pips, guys. Look at it. This is a lot of money, guys. This is a lot of money. Imagine entering this thing here and holding up to this point where price got to. This is a lot of money, guys. It's a lot of money for you. Okay, it's a lot of money. That's how we make money from this business. Now another factor you need to look at for when trading order block is impulsive move. There must be an impulsive move. There must be an impulsive move. Okay, now it is not in you are not going to look for it in a corrective move. Now look at this. It must be in line with the trend. Okay, it must be in line with the trend. After an impulsive move like this is an impulsive move. Then a correction starts, a retracement starts. It is within that impulsive move that you are going to see the order block, because it is within that impulsive move that the structure is broken. Okay, now look at it. Another impulsive move. This is another a break of structure, and this is another order block. But price did not return to it. So it is within that impulsive move that you are going to see the order block. Okay. Now this, you are not looking for it in a retracement. This is a retracement, a corrective move, right? Now you are not looking for it here. Imagine you used this. Okay, imagine we use this retracement to look for it. Let me just go back. Yeah, imagine using this retracement here, because price retraced this level. Price retraced back to this level, and then you want to use this last opposite candle here as your other block. You see how price broke through it very easily. So it's not going to hold. You must use the impulsive move, right? It must be an impulsive move. Now look at it. Price came here. This is our opposite candle here. Price came back, retested it, and moved out immediately. Now the next one is there must be a change of character. Okay, if you get it around a change of character, this one is for reversal. You want to trade the reversal of the market. You want to catch price when it is reversing. So you are going to catch it within a change of character. Once you see a change of character, that will be a very good opportunity for you to catch that reversal. Now look at this one, guys. Look at this one. I just saw this one now. I'm just seeing this one now. I've not seen it before. Now look at this, guys. This price has been trending to the upside. Look at it. Price has been going up, down, up. Now you can see a break of structure here. This is a change of character, because price has broken structure in the opposite direction. So this is a change of character, which we call market shift. Okay, shift in market structure. Okay, and this is the last candle here, the opposite candle here. That's the opposite candle before the break of structure. So you can see what happened. Let's see. This is it exactly. That's where price came back to. Price came back to it. Oh, I'm missing the drawing. Okay, price came back to it, just tapped on it and dropped. That's it. So this is it again here. At this point, we had that same scenario. Price was coming down here, and then we finished the structure, and then we had a break, a change of character right here. Price broke to the upside, and this was the last opposite candle. And price, as soon as price came back to it, you can see what happened. Price began to buy massively. This is it. price began to buy massively to the upside. This is it. So a change of character, whenever you see a change of character, it's even the same thing that happened here. This is it. This was a change of character. Price was coming down, you see, making lower lows here and lower highs. So all of a sudden price broke in the opposite direction. It broke structure in the opposite direction, which is a change of market structure. That is change of character, shift in market structure, or you call it change of character. So this was the last opposite candle, and then as soon as price returned back to it, which is other block, as soon as price returned back to it here, you can see it's bought massively and it's still buying. Okay, so this is exactly how you trade it. The same thing happens on even VIX 25. It still happens. Now there are two ways. The fourth one is, how do you trade another block? There are two ways to trade another block. Number one is by using a pending order. When we talk of pending order, we are talking about using your what do you call it, your buy limit or your sell limit. Okay, we're talking about using your buy limit or your sell limit. You can use the buy limit, you can use the sell limit now, or you can also trade it using market execution. When you use market execution, that means you wait for price to come back into that other block, then you see some signals and then you execute the trade automatically right there. But when you use pending order, it means you just use your buy limit or sell limit, just like this. Is that to use buy limit, maybe place it around here, and then you go to bed or you go to work. By the time you come back, by the time price gets back to that place, it will trigger the trade and you make some money there. Okay, so this is an instance here. We have this break of structure here, right? So as a matter of fact, it's a change of character, and then this was the last opposite candle here. So assuming someone was using a pending order, so we would have used a buy limit like this one here. Use a buy limit and then you bring it here, right? Then you place your stop loss below it, or you actually incorporate this low to help you, to give you more chance, right? So this is it, and then you place your take profit and everything, and this is it. Okay, I don't know, my network is bad. Okay, so that is how you use your pending order to trade this one. Otherwise, if you don't want to use pending order, maybe you have enough time and you want to wait for price to come back, this is it, how you trade it. You wait for price to come back to it. This is even the better way. Wait for price to come back to it. Then you want to see a rejection, which shows you that that other block is holding, because we know that it is not all. In fact, no strategy works 100%. Okay, not every other block will work. Now look at this candle. You see how it showed the rejection. So as soon as you see this rejection, you will know that yes, it's actually going to work. So you would have entered at the close of that candle. All right, and you place your stop loss right below it, and then you make your money. So these are the two ways to trade the other block. You either use a pending order, or you just use normal market execution. Okay, so let me remove this because you're not trading it, so I'm deleting it. It is the pending order I used, so I've deleted it. Now you can see here we also have the same thing happen here. Price has broken structure, and this is the last opposite candle before that structure was broken. So I'm waiting for price to get back to it. If price gets back to it and I see rejection, I am going to sell and make some money from it. So this is how it actually works. All right, so this video is already long, but watch it. Now the risk management. How do you manage your risk when trading other block? It's very simple, guys. To manage your risk and your money, you have to first of all know how much is your account and how much you are willing to risk. Then use your cross share like this. Just use your cross share, come back to this other block, place it on the top of that other block, then go to where you want to place your stop loss, if it's here or here. Now if the candlestick is very long, because most times you find out that candlestick is your other block candlestick, like this one here is very tiny. This is our break of structure here, and this is the last candlestick. It's very tiny. You can decide to use it. Okay, decide to use it totally. So you measure it here, and this is just 4 pips, right? This is your 4 pips, which if you use 1.0, you're not going to risk much. So if you are willing and comfortable to risk these 4 pips, that you can lose this $4, so you use 1.0. But if you are not willing to risk this $4, you know that according to your own risk tolerance, you cannot use this. You cannot risk this $4 here. I'm trying to get it correctly. This is it from the beginning of the candle, right? Know that based on your own risk management or based on your own risk tolerance, you are not willing to risk this $4. So you don't use 1.0 lot size. You don't use 1.0 lot size. You use what? You ask yourself, how much are you willing to risk? Maybe you are willing to risk maybe $2. So what you're going to do is that you now use 0.5, right? 0.5. That's what you are willing to risk. Then, if you are willing to risk up to $8, what do? You multiply your lot size. Now, that goes to you need to also learn how to calculate your risk. You need to learn how to calculate your risk, how to know your lot size you should use according to your account size, how to know your lot size, how to know how many pips that you are willing to risk, how to know the amount that you are going to risk. Okay, the amount you are going to lose if the trade goes against you, and the amount you are going to make if the trade goes your direction. For instance, assuming we are targeting this level here, look at what we are. Look at the number of pips. This is 24 pips. Now, if you want to translate it to money, how do you know how much this 24 pips is worth? So if you want me to make a full video on this, how to manage your risk, how to calculate your risk, let me know in the comment box below and I'll do a video on that. Okay, so that's just it. Now if the candlestick is too long, I'm looking for a very long order block. I've not seen, but if the candlestick is too long, what we should do is to go down to lower time frame. For instance, this one that we have here, let me just get down to lower time frame. We are going to see maybe to the 5 minutes time frame. Yes, let's go to the 5 minutes time frame and see. Good. This is it here, the last opposite candle. Here you can actually decide to refine the other block by moving it closer to this one here. Yes, but remember, when you refine it like this, you stand a higher chance of missing out the trade. You might miss out the trade because it might just come here, tap here, and then go back. Okay, it might just tap on this one here, this point here, and then go back. But here, your stop loss will be tighter and you'll be risking far lesser. That's how it actually works. This is how you to manage your risk, right? But preferably on this very one, you take care. So this is how you manage your risk when it comes to other block trading. Now look at this. Let me use this. Okay, I'm looking for a long one. Okay, so that is just how you manage your risk. You can scroll down to lower time frame and then refine it more. Refine the other block more and make your money. You can see this is another block here. How price reacted to it is another block here. Price reacted to it very well. This is the beginning here. As soon as price taps into it, you can see it's buying. So this strategy keeps working, and time frame is not limited to any time frame at all. You can can use it with the higher time frame, you can use it with the lower time frame. The only thing is that you make more money with the higher time frame because the higher time frame holds more and is going to run for a longer period of time. That is it. Okay, so guys, that is just how it works. Thank you for watching. If you have really watched this video, it's a lengthy one at that. If you have really watched it, congratulations, and let me know what you think in the comment box below. Okay, and let me check my trade if you still running. I think this is it. We are still in profit. This is how you hold trade for a long time and you are very confident. Okay, so thank you guys for watching. This is the Alpha Trade. Please like this video and subscribe to this channel and join my Telegram group by clicking the Telegram link in the comment box and below this video. Thank you guys for watching.